Welcome traders. In this video today, we're going to focus on ICT daily bias. I'm going to show you a fantastic method to identify the daily bias and to be able to predict what will happen next in the market. So the key to this process is understanding, is the market in continuation? Is it in reversal? Is it in consolidation? Once you understand these components, you'll have a very good understanding on how to determine this bias of the market. Then I'll jump into the charts and I'll show you how to tie this all together. But let us go through the basics first so you get the good understanding, and then it will all begin to make sense. So first of all, let's start with continuation. How to identify continuation in the market. Now this works best on higher time frames. So using on a 4-hour or a daily is recommended. So what you want to see, if you've got two candles, either 4-hour daily candles, and the second candle breaks below the low of the previous candle, that is showing us continuation to the downside. On the bullish example, if we've got these two candles and you can see the most recent 4-hour daily candle is breaking above the previous high candle, that is showing us there's continuation to the upside. And with reversals, what you want to see is price come up to a previous candle high and reject that high. You'll see there's a failure to displace of the previous high. And on our bearish example, you can see with this candle low and then the next candle, there's this failure to displace past the previous candle low. This candle is rejecting that low and there's no body that is closing below that low point. So it's showing this potential reversal is setting up. Consolidation. In order to understand consolidation, what we do is we mark out the high and the low of the candles, and you'll see these next consecutive candles are not able to break above the high or the low or even come close to them. This usually causes an inside bar or a double inside bar. When we get these inside bars, it is a sign of consolidation or contraction in the market. This is when the buyers and the sellers become equal. So we want to wait for more confirmation, and we must wait for either the high or the low to be taken out before we can consider looking to take a trade. Let us dive deeper into these concepts. With continuation, you can see over here, we get a break in structure to the upside. This current candle has broken and closed above the previous candle. This is a clear sign that continuation is happening to the upside. Usually when we get a break of structure to the upside, price will retrace into either a fair value gap or into a golden pocket fib ratio. And this is where we can take potential long entries into this continuation to the upside. For our bearish continuation, you can see we get a break in structure to the downside. This candle closes below the low of the previous candle, and this is showing us continuation to the downside. If we were going to look for an entry, we'd wait for that break in structure. We'd wait for price to retrace either into a fair value gap or into a golden pocket fib, where we can look to take our continuation entry. Understanding continuation candles. If it's a bullish candle, we always want to see it open low, close high. So you'll see open, low, high, close. This lets us know this is a bullish continuation candle. You always want to see it open low and high close. Usually these continuation candles contain big bodies and small wicks. The small wicks let us know that expansion is entering into the market. And for our bearish example, you can see we've got an open high, low close. So you want to see open, high, low, and then close. So open high lets you know that this is going to be a bearish candle. And if this is happening after break-in structures, this is letting us know there's continuation to the downside. So let's look deeper at these continuation candles. They usually have small wicks relative to the body. This is letting us know there's more buyers than sellers into the market. And you can see if you look at this higher time frame candle, we get the opening price over here. Then it goes low, open, low, high, close, which is letting us know this is a bullish setup. For a bearish continuation, you can see we've got the opening price over here. You see it opens at the body, high, low, and close. Price opens, goes high, sweeps out a high, and then low and closes. This is letting us know this is a bearish setup. When we have these directional candles, it is showing us this continuation. So you can see break in structure to the upside, break in structure to the upside. All the candles are open, low, high, close candles, which is letting us know we have this bullish candle uptrend happening. And we've got our directional candles showing continuation to the downside. when we get these consecutive break-in structures to the downside with these open high, low, close candles, showing us that these candles are bearish and that there's continuation to the downside. So when price comes and hits a key level and we get an actual reversal occur, and then we wait for the break-in structure after that reversal to give us a confirmation of this continuation happening. And when that happens, then we look for a continuation entry either into a golden pocket fib or price retracing into a fair value gap. Now let's go into the reversals. So you can see we've got price reaching a high point over here. Then the next candle fails to displace past that high point. And you can see this clear rejection into that high. Price is not able to close the body above it. And this is a clear sign that a reversal is taking place. As price approaches a previous candle high and we get this rejection into that zone, it's a clear sign that price does not want to go higher and that a reversal is likely to occur. In our bullish example, you can see price has created a low point. The next candle fails to displace past that low. All we want to do is wait for the candle to close, and this reveals to us a high probability of a reversal taking place. So here's another example. You can see we've got these break-in structures, continuation to the upside, and then previous high of the candle, price is not able to displace past that level. So it's showing us we've got strength, strength, strength. Now we've got weakness, we've got this rejection. You can see this big manipulation candle. It is a reversal candle as well. So this is the signature we look out for to give us clues that a reversal is going to happen. For our bullish example, you can see we've got this bearish continuation to the downside. And then you can see this candle low forms a low point, and the next candle is not able to displace past that point, showing this failure to displace, and the candle is closing back into the range. It is also giving us a clear reversal candle in play. All we do is wait for this candle to close, and this is letting us know a reversal is likely to occur next. So how this plays out, we get price reaching this high point. We get this failure to displace over a previous candle high. And then if we drop onto a lower time frame, you can see we get this manipulation into that swing high point. Price cannot close over there, and it is a clear sign that it's creating a swing high in the market. And swing highs are strong identifications that reversals are going to take place, especially if this happens on a higher time frame. And now we look into consolidation. Consolidation is really just letting us know that the buyers and sellers have become equal and that there's not much movement happening. The wicks usually are equal on both sides with smaller bodies. Usually consolidations are periods for us to just step back and wait for the next step to reveal itself in the market. So now that we understand continuation, reversals, and consolidations, I want to get into the secret sauce of this video, how to predict the next candle, which leads up to how to understand the bias of the market. So once we have our candle high and our candle low, whether that be a weekly candle, daily candle, or 4-hour candle, which is better to use higher time frame candles, these become strong draws of liquidity as we have pools of liquidity resting on candle highs and candle lows on the higher time frames. These become excellent places to look for entries and excellent places to look for targets as well. So our prediction is going to be based off understanding draws on liquidity, looking for reversals, and understanding continuations. And remember, predictions are never going to be 100% in trading, but we can create a high probability prediction of where we can understand price to go based on these concepts. So understanding draws on liquidity, what you want to do is you want to mark out the higher time frame candle highs and lows, which become magnets for liquidity. So you can see in this example, I've marked out the high and the low, which in this example can be the previous day high, it could be the previous week high, just it could be the previous 4-hour high, whichever higher time frame candles you like to trade on. So we mark out the highs and the lows, and these become draws on liquidity where we can anticipate and frame price to come to take out these high and low areas, knowing that there is resting liquidity. In this example, you can anticipate price is going to take out the high because the candle is already close to the high. In this bearish example, you can anticipate price is going to take out the low because it's already very close to the previous day low. So understanding the previous candle high and low, where we can anticipate price is going to be pulled to these levels to take out the liquidity. And now predicting reversals. So you can see we've got the previous candle high, previous candle low. This next candle, we're getting a failure to displace. We're getting a rejection into this high. Clearly taken out the high. It's rejected. The candle body is closing back in within the range. So there's a high probability that a reversal is going to happen at this point. In our bearish example, you can see we've got a low and a high. And this previous candle low, price is not able to displace past that level, and it's closed back into the range, showing this high probability of reversal occurring. And now predicting continuations. So you can see if we've marked out the high and the low of the previous candle, and the most recent candle has closed, body closed above the previous day high candle. This is showing us that it's breaking above the high of the previous candle, and it is a high probability of price moving higher. In our bearish example, you can see we've marked out the high and the low of this previous candle. The next candle has broken the structure of that candle. Candle is closing below the low of the previous candle, and this is showing us this is a high probability that we have a continuation to the downside. So understanding continuations or reversals is a big part of understanding how to determine the bias of the market. What we look for is higher time frame candle high and lows, either daily highs and lows, weekly highs and lows, and you can also use a 4-hour high and low if you like to. We also look at swing high and swing low points as areas of liquidity where we can get potential reversals occurring. So how we do this with continuations, you can just imagine we've got the previous candle high and low marked out, and then either you're going to get the next day candle going to break above the high and close above the high, which is showing continuation to the upside. Or you're going to get the next day candle break below the low and close below the low of the previous candle, showing continuation to the downside. Otherwise, with reversals, you can see we've got the previous candle. Here we've got the high, we've got the low, and we want to see price reach the high of that candle. And this is precisely where we will look for a reversal or a failure to displace occur. On our bullish example, you wait for price to come down to the candle low, and this is where we pay attention. Notice, is it going to displace or fail to displace the low of the previous candle? If we get a failure to displace at the previous candle low, this is a high probability that a reversal is going to occur. And then when incorporating this concept within swing highs and lows, what you want to do is you want to mark out a swing high or low in the market. And this is just an extreme high or an extreme low in the market. We wait for price to come to that level. Once it comes to that level, then we observe how price reacts at that level. And this is where we get a high probability of a reversal occurring or a continuation. We just pay attention for this failure to displace at that level, and this lets us know a reversal can take place. And then you can see we get a valid reversal breaking down, and then you can see the next candle breaks below the structure of the previous low, which starts to form a continuation to the downside. And then you see the next candle forms a break of the previous low, forming another continuation. By combining reversals, continuations, and these swing high and low points, we can really get a lot of information about how to anticipate and frame what is going to happen next. So let me take you onto the charts now and show you exactly how we can take everything we've learned and apply it into this principle of how to determine and predict what will happen in the market. Here we are on the charts. I'm looking at cryptocurrency coin, but bear in mind this strategy will work on any type of trading asset, whether it's crypto, forex, indices, futures. It doesn't matter what it is. If there's a chart and you can trade it, this strategy will work. So what I've done is I've marked out a swing low point, and you can see prices come to that swing low point. So whenever price comes to relevant lows and highs, we get these reversals occur. You can see over here, this is also a low point. Price is coming towards it. So price is coming towards two relevant lows in the market. So we can anticipate a reversal will happen at this point. I'm on the daily time frame right now, but just bear in mind, whatever I'm showing you now, you can do it on a daily chart, a weekly chart, a 4-hour chart, whatever higher time frame chart you'd like to trade, you will do it all the same as what I'm showing you now. So you can see prices come down to these swing low points, and this is usually where we get a reaction. And you can see we did get a reaction. You can notice here we get a failure to displace. So if we just pay attention to this candle over here, and we mark out the low of this candle because this is the previous candle, you can see the next candle that precedes it is not able to close below that and closes back in the range. So this failure to displace is letting us know a reversal is taking place. Once we see this, we can anticipate a reversal to the upside, so we can frame the high as our draw on liquidity. You can see that we got a bit of consolidation now. next candle, and there you go. So now you can see the next candle is broken above the previous high. So now we've got continuation to the upside. So now we can frame price will take out the high. Okay, we got consolidation. Also pay attention when you get a break of a structure to the upside, big chance are there's going to be a retracement. So what we do is we mark out a golden pocket region of the candle that caused this displacement. This candle displaced it above the previous highs. So I just marked out a 50 to 60% of that candle, and we wait for the next candle to come in. You can see it tapped exactly into that level and then took out the previous highs. So now we're looking for more continuation to the upside, and we're framing the highs as our draw on liquidity. There you go. It takes out those highs, and we mark out the highs as our draw on liquidity. So you can see we're getting nice continuation to the upside. Now we're getting consolidation, but also notice this candle is a displacement candle. So we can grab that candle and we can mark out the 50 or 60% level, and we can anticipate price come back, retrace that to that level, and then keep continuing in its intended direction. So we can anticipate a long position. You can see now the high has been swept and taken out over here. So this looks like a reversal. So we mark out the low and we can anticipate price going to the downside. Oh, there you go. So you can see price broke those lows. So we can anticipate either price is coming to tap into this fair value gap or this 50 to 60% level of this displaced candle. So let's wait to see what the next candle. You can see price is tapped into this candle, taking it out. So now we want to see price take out the highs of this candle. And there you go. So now we're forming a continuation. We want to see price take out the highs. But also notice over here, if we look to the left, you can see we've got a fair value gap. So it's always important to look to the left and pay attention to, is price hitting a key level? You can see over here we've also got a swing high point. So we want to keep in mind that when price gets to fair value gaps or swing highs or swing lows in the market, there is going to be a sort of reaction to those levels. So price is just tapped into this fair value gap at the moment, and we can anticipate either price is going to react off it or break through it. So let's see what is going to happen next. You can see price is broken through to the other side. It's a nice strong candle, so we can anticipate continuation to the upside. We get a rejection to that candle. Once we get a rejection, fail to displace, we can anticipate price is going to go lower. You can see price took out the low and the high with this Death Star candle. So what we want to do is we just want to wait to see what the next candle will exhibit. Boom. Now we got a big momentum candle breaking to the upside. This is also a displacement candle. So we can also anticipate that there should be a retracement to the 50 or 60% level of that candle. But as it stands, we look for another long entry because it's showing continuation to the upside. There we go. So price breaks to the upside. So now we were looking for another continuation to the upside. And you can see price took out the lows, but it is still within that range. So let us wait for the next candle. So now you can see we get a failure to displace of the upper candle. So now we're looking for a short position. So we mark out the lows and then we look for the next candle. Breaks below the low of the previous candle, so we can anticipate continuation to the downside. It sweeps those lows of the downside, so we can anticipate price will now go to the upside. It swept the high and the low showing weakness, so I'm anticipating price to come lower down because it still needs to come tap into this fair value gap and this 50 to 60% level of this displacement candle. You can see it's consolidating in that area. So I'm just waiting for these lows to be taken out. And there you go. Price takes out the lows, taps into this fair value gap, grabs the liquidity in this 50 to 60% level of this displacement candle. So now we want to look to a move to the upside. There you go. Price breaks to the upside. So now we want to look for a move to the upside. We get no move to the upside, so we see price is consolidating. So we want to wait for the next candle. And you can see price breaks below the low of the previous candle. So we can anticipate price is going to go lower. Price breaks below that low. So we can anticipate price is going to go lower. We get a failure to displace. But also bear in mind, if we stretch this across, you can see price is just tapped into this level, possibly coming back down into this fair value gap. So now we get this failure to displace on the low. So we're anticipating a bullish movement. You can see we get another rejection to the downside. This is a failure to displace to the downside. So I'm very confident now we're going to get some bullish movement to the upside. We want to see these highs being taken out. Takes out those highs, but does not close above that level. So let us wait for more confirmation. Ooh, there you go. We get a very big candle to the upside. And if we look over to the left, we can also see that price is also hitting a fair value gap over here. So when we get these big momentum candles to the upside, we can anticipate that price will continue higher. So we want to see these highs being taken out. And there you go, they get taken out. So we see continuation to the upside, gets taken out. Want to see more continuation to the upside. And there you go, we get a failure to displace, which is letting us know potential reversal is taking place. So now we can anticipate price is going to come lower. Price takes out the low, takes out the high. So let us wait for the next candle confirmation. So price takes out the high, breaks structure in the high, so we can anticipate price will go higher. Price closes back in the range. So let us wait for the next candle, closes back in the range. And now you can see it's a break in structure from the previous candle. So we can anticipate price is going to go lower. We get a rejection at that level. So let's see what is going to happen next. Price breaks to the downside. So we're looking for a short position. Price does not break to the downside and it actually breaks to the upside, breaking the highs. So now we're looking for a long position. We've just reached current price. We cannot go further than that. But I trust that this example illustrated to you how we can use these candle closures, whether it's a failure to displace or displacement, letting us know continuation is going to take place. But if we can just focus on a higher time frame candle, if it's going to be a failure to displace of the low or high for a reversal, or if it's going to be a break of the high and the low for a continuation. Also keep in mind that when price comes to fair value gaps or swing high or swing low points, we do get reactions. And these are the key areas we look for these confidences to line up to. I would suggest take a chart, practice this on your chart over and over and over, and you'll get a very good understanding of how to anticipate what will happen in the market and how to predict what candle will come next.